Coming up next here, Beyond Meat reports its earnings today after the closing bell. The plant-based meat company is down big today. McDonald's announced a launch of its McPlant product. So Beyond Meat is still up more than 90% this year, but the competition is certainly growing. And now the question is it time to take some profits? For that discussion, let's welcome in Arun Sundaram, equity analyst at CFRA Research. Arun, I'm glad you're with us. This is a fun company. It is a company that people love because they feel that they're saving a cow. It could also save us during what we had during the pandemic when all the meat producers were shutting down. You still were able to get Beyond Meat. It has its place, but it has a lot of competition, doesn't it?
It does, yep. It has a lot of competition, and interesting, just in the past 20 minutes or so, a Beyond Meat spokesman actually said that they are co-creating the plant-based patty that's going to be available at McDonald's. So now Beyond Meat shares are up about 7 to 10% now. So earlier today, McDonald's.
Amazing.
Yeah, earlier today, McDonald's unveiled their plant-based meat product called McPlant. And that they said that they were going to create it, and it's exclusive to McDonald's. And they didn't mention anything about Beyond Meat, so everyone thought that they were taking their own route and not going through a partnership. So Beyond Meat shares tanked during that time, but have since recovered fully.
What is your outlook for the company? I know you have a sell rating, a recommendation of a sell rating. Is that because of just how much it's run up? Do you think it's too far, too fast? Why would you have a sell rather than a hold?
Yeah, so we think the fundamentals paint one picture, and then the stock price paints another picture. Right now I think Beyond Meat, they're going through a really tough time right now because they compete in two different channels. One is the retail outlet, and one is the food service outlet. And obviously the retail outlet is doing very well right now because everyone's going to the grocery stores buying these plant-based meat products. But their food service side, which has historically represented about 50% of their sales, have been in a free fall. In fact, so last year, food service and retail, their sales split was about 50-50. And then in the past quarter, the sales split between retail and food service was about 88% and 12%. And what we fear is that their food service channel is going to take a while to recover. And that's because most of their food service sales are to these independent, smaller restaurants, these mom and pop shops. So I think they'll feel tremendous pressure trying to recover in that channel, which puts more pressure on the retail side of gaining more customers.
Right. I mean, I went to a local burger joint out by the beach in eastern Long Island, and they had the Beyond Meat burger. So that's to your point. But it's hard to get out to all those places and keep your product there, right? They would do better if they continued with the likes of McDonald's and Dunkin' and Tim Hortons. What's your outlook for those big deals?
Yep. So yeah, I think the food service side is, that's where the exponential growth I think is right now. We mentioned McDonald's. We did an analysis earlier this year, and we think that their deal with McDonald's could add about $100 million of incremental sales to Beyond. So that's a sizable chunk, and obviously that's great news for Beyond, and it's timely as well because, as I said before, right now Beyond Meat needs to constantly add new customers, increase their new distribution in order to offset some of the challenges and losses that they're experiencing in their existing channels and existing customers.
So what's going to be the catalyst to get it back to the 200 level? I remember when it was at 239. What's the catalyst? What does it need? What is it missing to give it that kick to push it back up? Because you have a sell rating and $142 target, 140 whatever change, 142 and change. Where's the catalyst to get this back up to 200 or 175?
So I think the major catalyst is going to be the gross margins. So right now, Beyond Meat, they're aggressively trying to lower the prices of their products to reach price parity with conventional animal meat. So that's obviously hurt their selling prices. At the same time, their costs are up right now because of all these inefficiencies and lower production levels. So lower prices, high costs have been eating into their gross margins, So going forward, I think what we need to see as a positive catalyst is that they can still be very profitable and gain new customers at the same time. So a few quarters ago, their gross margins were near 40%. And then now in the latest quarter, I believe their gross margin was around 29.7%. So a huge turn downward, and we're expecting some gross margin headwinds this upcoming quarter. They report later today, but as you mentioned, I think the big catalyst going forward is if they can still remain profitable, and grow their customer base.
I just want to clarify, your price target's $100.
Yeah, that's right.
It's a $100 for 12 months.
So we have a $100 price target and a sell rating.
Today.
Yeah, so we have a $100 price target and a sell rating.
It sounds painful. Sounds ouch. It doesn't sound that great, but you like the company and you like the outlook and you like some of the catalysts, but it feels maybe it's just a little overvalued at this time. I get what you're saying. Okay, Arun, thank you. Join us again soon. Arun Sundaram, equity analyst over at CFRA Research with a $100 price target, sell rating on Beyond Meat ahead of its earnings, so we'll watch for that.